There's a new bill in Congress with the word nest egg in the title, and it could directly affect anyone who's owned their home for 25 years or more, or anyone waiting for more homes to hit the market. It hasn't passed, it might not pass, but it's worth understanding exactly what it says because the story behind it explains something that's been quietly happening in the market for years. I'm Dawn Crow, a residential real estate advisor here in Dakota County. Every week, this channel breaks down one piece of market reality, accurate, no hype, no fear. Today, the Nest Egg Protection Act. House Resolution 9064. The Nest Egg Protection Act was introduced on June 1st, 2026 by a representative of New York. Here's exactly what it would do. If passed, it would temporarily raise the capital gains tax exclusion on the sale of a primary residence to $1 million for both single filers and joint filers, but only for sellers who are 65 or older and have owned their home as their primary residence for at least 25 years. Now, compare that to current law. Right now, under Section 121 of the tax code, a single filer can exclude $250,000 in gains from a home sale, and a married couple filing jointly can exclude $500,000. Those numbers were set in 1997. They have never been adjusted since, not once, while the average home price in this country has roughly tripled. Important distinction to be precise about: this bill has not passed, it is not law. Nothing about how home sales are taxed has changed yet. This is a proposal in early stages and there's no guarantee that it moves forward. So, would it be fair to say that most people don't think about capital gains tax until they're staring at a closing statement? That's exactly the problem this bill is trying to solve. Picture someone who bought their home in the late 1990s for $250,000. That home might be worth $800,000 today. That's a $550,000 gain. A married couple gets to shield $500,000 of that under current law, so $50,000 becomes taxable. A single filer on that same home only shields $250,000, leaving $300,000 exposed to capital gains tax. For a lot of longtime owners, that tax bill is enough to make them stay put, even when they genuinely rather downsize. Economists have a name for it: the tax lock-in effect. It sits right alongside something most people have heard of, which is the rate lock-in effect, where someone with a 3% mortgage doesn't want to trade it for today's rate. There's a third piece, though, that almost nobody talks about: Medicare's Income-Related Monthly Adjustment Amount, or IRMAA. Medicare looks back 2 years at income. A large one-time gain from a home sale can spike that number and trigger higher Medicare premiums for 2 full years afterward. So for someone on a fixed income, a home sale doesn't just mean a tax bill, it can mean a temporary hit to their monthly healthcare costs too. So put all three of those things together and it really starts to make sense why so many homes that could be on the market simply aren't. The Nest Egg Protection Act isn't the only proposal addressing this. There's a second bill, the More Homes on the Market Act, HR 1340, introduced back in February of 2025. That one is broader. It would double the exclusion for every homeowner, not just to seniors, to $500,000 for single and $1 million for joint. And it would index that number to inflation going forward so it doesn't freeze again for another 3 decades. So side by side, the difference is scope. The Nest Egg Protection Act is narrow and targeted: seniors, 25 plus years of ownership, larger exclusion. The More Homes on the Market Act is broader and permanent feeling, built to adjust over time. Neither one is law right now. Both are worth watching. because together they signal something, that there's real bipartisan attention in Congress on the idea that this exclusion is outdated. So, would this be relevant to someone who's owned their home for 2 or 3 decades and has been quietly wondering what a sale would actually cost them? That's exactly the household this bill was written for. And for buyers, especially anyone who's felt like there's simply nothing to choose from in this price range, this is part of why. A meaningful share of homes that could be listed are sitting with owners who've done the math and decided that the tax hit isn't worth it yet. If a bill like this moves forward, it wouldn't change anything overnight. Economists estimate that any real inventory effect would take 6 to 18 months to show up after something like this became law, and that's assuming that it does. So, for anyone who's 65 or older, who's owned their home for a long time, a few things worth knowing regardless of what happens with this bill. Would it help you to know your actual gain? Not just today's value minus what you paid, but adjusted for every capital improvement made along the way. A new roof, an addition, a renovation, all of that raises the cost basis and can lower the taxable gain. Many long-term owners have more of that built up than they actually realize. So, would it be worth confirming eligibility for the exclusion that already exists today under current law before waiting on anything in Congress? And if Medicare timing matters, would a conversation with a tax professional about the 2-year IRMAA look back be worth having before a sale, not after? And for buyers watching this hoping for more inventory, the honest answer is don't wait on a bill. Get financing in order, understand what's realistic at today's rates, and stay ready to move when the right listing does appear, whether it comes from this bill, natural turnover, or something else entirely. That's the Nest Egg Protection Act, where it stands, what it would actually do if passed, and why it matters whether or not it ever becomes law. If there's a bill or a piece of housing policy worth breaking down next, drop it in the comments. I'm Dawn Michelle Crow, and that's The Honest Move.